Hey everybody, welcome to this day trading video, pre-market analysis for day trading. This is just a kind of a basic overview of one way of looking at the price action in pre-market to determine whether or not you want to take a trade, and if so, which direction. In this particular case, we're working with Twitter. This was from 4/22/22. Number one, draw pre-market low and high levels. So as you can see, we got this low level here. Throw in a level. We got this high point here of a 2-minute chart candlestick. Throw in a level there. Now the only thing here is there's already a level that's very near this level. So I won't draw that one per se because I've already got the previous day close level, which is very close. And same with this one. It's not nearly as close, but it's still close enough. And I feel like my massive gap level is stronger and going to be more pertinent. So I'm actually not going to even draw these two levels. And this isn't always the case. Sometimes it's very important that those pre-market levels are in there. In this situation, I don't think it is really that important. Number two, look to see how the price has reacted to my levels in the pre-market. So these levels that are on here were here before, the day before, or maybe in a week before. This massive gap up level at 47.80 was there from when Musk was talking about purchasing the stock. So that's what that huge gap was. So I'm looking to see how it's reacting. So I've got this first level here. It's a previous day 30-minute range, and it's the top of it. It's like the resistance of that range. And then I've also got this level here, which is a 4-hour range, and it's the bottom, it's the support of that 4-hour range. Plus, it's also the support of a massive gap up on the daily. So I've got those two levels, right? So this one here, we see that so we want to see how the price was reacted to that level. And so as you can see, it broke through here, but just very briefly and not too far. All right, so you can see that for the most part, that price level held that level. It never even really touched it other than those 4 minutes or 8 minutes. Otherwise, you could see that it respected that level for quite some time. Okay, and so now looking up at this gap level, this daily gap level, same sort of situation where the price broke through it, but then rejected it pretty quickly. And then we've got the previous day close level at the bottom here at 47.08. And we can see that the level came down, didn't even quite touch it, and then bounced right back. So it rejected it pretty solidly. All right. Now, this particular information shows strength for us because it held that level quite a bit. So if it would have broken through that and then kept going down, obviously that's weakness, but it didn't. It broke through just slightly. And for the most part, for a considerable amount of time, a couple hours, it held that level. So that's an indication of strength for us, right? And then for this other one, this changes that from strength to more neutrality because it went up to this upper range and rejected it. It doesn't make it weak overall range, just more of a neutral situation because we had the strength combined with rejection of a resistance makes it feel more neutral. All right, so that's that. Number three, we look to see how the price has reacted to Camarilla pivot point levels. And if you don't know what those are, you can Google it. Everyone on Bear Bull Traders uses it, which is where I spend a lot of my time. And bearbulltraders.com. And so what we have here is we've got this one level here, which is a Camarilla pivot point resistance 1, so it's R1. And you can see that stock rejected that upper 47.80 level, came down and bounced off this R1, okay? So that's pretty important that it did that. Which is another sign of strength. And the reason is it could have gone lower but it didn't. It could have gone down to that 47.21 level, or it could have gone all the way down to the previously closed, but it didn't. It held this higher level, which is also an R1. So now we're back to strength, feeling an overall sense of strength with the stock this morning. Okay. And yeah, so as you can see, the level there that's where the level was before, and you could see where compared to where it bounced was considerably higher than that. Not considerably, but enough to make a difference, enough to make it feel like it's got some strength. Number 4, identify a general market sentiment is what we're aiming for: weakness, neutrality, or strength. In other words, does the stock appear to be setting up for a decline, for a consolidation, or for a markup at the open? That's what we're looking to do. Just a general not consensus, but a general thesis as to whether or not this stock, from some of this information, is going to be weak, neutral, or strong at the open. All right. So number 5, identify the most important levels to watch. And so we've got 1, 2, 3, 4 levels here right now that we're indicating. And this one's important. This R1 might be important. This is less important, and this is even less important. The reason I say that is because we want to think about where the price is right now. And the price is closer up to this 47.80 level. So those levels are going to be more important for us. So because we're looking to determine important levels, particularly at the open, all right? So in proximity of the current price action. So therefore, we're looking at just these 2 levels right now. That's what we're going to look at. So let's do a quick review. We're first drawing pre-market low and high. Second, we're looking to see how the price has reacted to my levels that I've drawn in the past or this morning. We look to see how the price has reacted to pivot points, R1, S1, etc. Identify general market sentiment. Is the price overall weak, neutral, or strong this morning? And then we want to identify the most important levels to watch, particularly at the open. All right. So number 6, we're going to look to the level 2 window to see if we can see any imbalance in the orders. All right. So here's a screenshot of the level 2 on Twitter on this day on 4/22, and depending on whether or not you are super familiar with level 2, you may want to go Google some. There's a million videos about level 2, what everything means, how they work. I'll cover some basics here, and again, this is just one little tool that we use. It doesn't tell you everything you need to know. It tells you one of the tools. Okay. So on the left side of level 2, we have the bid side, which are all of the buyers, all right, who want the lowest price possible, right? When you go to buy something, you don't want to pay more. You don't want to pay what they ask. You'd love to pay even less, right? So you have to keep that in mind. So the buyers on the bid side are actually driving the price down because they want a cheaper price, okay? So and you can see here, this is the last price. So this is the current price in this particular fraction of a second where I snapped this screenshot. The price was 47.45. Okay. So as you'll see here, you've got an order. Someone wants 800 shares. Each number represents a 100 share lot. So this person wants 800 shares, but they only want to pay $47.12 as opposed to $47.45 at the top. Here's another one, 1,100 shares. They only want to pay $46.25. Here's another one, 1,000 at $44.45, and we got this one all the way down here, 1,300 shares at $40. So what I'm highlighting in this particular situation is any orders that are 1,000 or more shares. That's basically what I'm looking at. Just as a real basic general rule, the more significantly sized orders are the orders with more weight. An order of 2,000 shares versus an order of 100 shares. Which one is more volume? Obviously, the order of 2,000 shares is an increase in volume, all right? All right, so on the right side, we've got the ask, and these are the sellers, and they want the highest price possible. If you're going to sell something, You don't want to sell it at market. You ideally want to have even more. So you want to make even more profits. So you want the highest price possible, which is going to drive the price up. Okay. So same thing situation here. We've got 2,500 shares. Someone wants to sell it for 48. They're willing to sell these 2,500 for $48, which is, you'll notice, is only, it's 55 cents above the 47.45 current price. And then we've got all these down here, and this one all the way at the bottom. This individual is willing to sell 1,600 shares, but they want $55. So they feel pretty confident that this stock is going to go up, and so that's why they've got that insane amount there. And I say insane because it's way above, I don't know, 15%, I think, above the current price, something like that. Um, but that may pay off for them and may drive the price up. Okay. So remember, the level 2 is in the constant state of flux. It's always developing. This screenshot represents only a fraction of a second in the order flow. Level 2 displays volume potentially entering the market. And whether that volume may be balanced or imbalanced, driven by buyers or sellers, or neutrally consolidating. So that's very important. The whole point behind looking at this is we're looking for imbalance. If the level 2 is balanced, then we're either in consolidation or distribution, accumulation, and we're not really going anywhere. We're looking for imbalance, where all of a sudden either all the sellers or all the buyers are taking control and the price is driving up or sinking down. And again, just remember that the level 2 is just one of many tools that you'll use to develop your trade thesis. All right, so what we're looking for in level 2 is signs of imbalance, right? And what we're looking at is two different aspects. One, volume in orders, okay, and orders that are moderately spaced and going from as close to the top of the ladder as possible as close as to the bottom as possible. So I'll show you what I mean by that. So I've highlighted these four orders here. They're each over 1,000, and there's four of them, right? And then there's one more that's over 1,000. So there's a total of 5 orders here that are over 1,000 shares. And just take note of how the increments in between these two orders, there's a spacing there. And you'll see when we look at the other side how different it is, okay? So here I've again indicated the shares that are, the orders rather, that are 1,000 shares or more. And notice how there is 6, 7, 8, 9, 10, 11. There's already twice as many orders. And then if I increase the highlighting to include the 2,000 plus shares, we've got way more. 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 orders over 2,000. So as you can see, it almost triples the number of orders on the bid side. So what this is telling us is, one, we have way more volume on the bid side, and two, our orders are all moderately spaced. There's no massive gaps in between these two, okay? So we've got 5 here, we've got 14 here. And just for fun, I pointed out that the top of this on the bid side is 2.5% away from the current price. And the top of the ask side is only 0.8% from the current price. So it's really close to it. And that is what we want. We want imbalance. Imbalance means there are orders all the way at the top of this quote ladder and all the way at the bottom of this ladder. And as you can see, all the way down here. So you can see the difference here. Here's the largest spacing on the ask side. And as you can see, it's considerably smaller than the largest spacing over here. It's way bigger, and even bigger than this spacing here, right? And then as you can see, the total numbers of these orders that are over 1,000 spans this area, whereas this on the ask side spans a much greater area. So there's considerably more volume on the ask side in orders, and they are spaced moderately to provide, rungs of the ladder, so to speak. If there was a huge gap in between on this ask side, if those middle 5 or 6 highlighted orders weren't there, we'd have a massive gap and we would not have a ladder. All right, so as you can see, we are way imbalanced right now at this particular point, which I believe was 6, excuse me, 6:22 in the morning, driving the price up. Okay, so we are thinking this is going to drive the price up. So we have strength from our candlesticks and how it was reacting to levels, and now we have a second position of strength in the level 2, right? All right. So we've looked at level 2 for any possible imbalance or orders. So 7, define your thesis. Well, Twitter might break out at the open and might be strong on the day. That's my thesis. I'm never going to say, oh, Twitter is going to break out at the open and rise and climb and be strong. I don't know that. Nobody knows that. I say might. Some people would say it's a probability game, which it is. But for me to say it's probably going to break out is still too strong of a bias. I prefer it might break out. I'm going to be ready if it is. That's how I like to approach this sort of thing. All right, so we've got our 2 strong levels up here, right? So, and we've got strength both in our candlestick chart and our level 2. So now we're just going to see how this thing plays out. All right, here's the next candle. Next 2-minute candle opened up. Notice it opened up below the level of the previous candle, but went way above it, went through our level. So we're still just watching. The still feels strong. Still feels, get your vowels in there, strong. But you will notice that it closed above both of those levels that I have highlighted, the R3 and my 4780 gap level, okay? So now the market is open, and here is our first candle. So wait for the first 2-minute candle to close before considering an entry. That's the rule I go by. Some people wait 1 minute, some people wait 5 minutes, some people don't wait at all. I wait for a first 2-minute candle. Never do I try to enter before. Sometimes I break my rule, and sometimes I fail as a result. But I try to stick to that rule. So as you can see, it opened in between my levels, which is good. Also, another good thing is that it dropped slightly down to the R3 and rejected it and shot up. So that's a good sign. That's another sign, a sign of strength at the open here, okay? However, while this is a bullish candle, this first 2-minute candle, it is the weakest version of a bull candle with all this massive wick on top. So this is not clearly a strong opening rising first candle, okay? Notice how it went up to the R4 up here. You can't really see it because I accidentally changed my pivot point colors and to gray, and one of the grays is the same as the pre-market gray, so I have to change that, but that level's there. I'll make it clearer to see. You can see I put a black line in there. So now we'll wait to see how the first 15 to 30 seconds of the second candle play out. All right, so here's the second candle, open below the previous candle close, which is a little bit of a sign of weakness. Okay, see how it opened below that level? Subtle sign of weakness. So we're going to wait and see what this does. So now I'm letting this full candle play out. So this is, if it weren't for, well, the price dropped below R3 here, then rejected it. Okay, so that's a good sign. However, it closed higher with a long lower wick. Considerable upper wick shows that buyers don't have full control of to push Twitter higher yet. Right? See this amount here. If that candle was solid on top with no wick, it might be a different story. But that's a pretty big chunk. It's about a quarter to 20% of the candle is wick on top. So at least it's showing that there's not enough control to, the buyers don't have enough control to push Twitter higher, at least not at this second, that is. So we wait once again. All right. So here's the next candle. As you can see, we got a bearish. It's almost a bearish engulfing. It's weakness. So we definitely want to wait to see what's happening. All right. And here is the fourth candle. Again, a bullish candle, but the weakest possible bullish candle is, a low end like that. So guess what we do? Yep, you guessed it. We got to wait and see what's going down. Most of a consistent trader's time is spent waiting. Notice I didn't say most of a trader's time. Most of a consistently profitable trader's time is spent waiting. Patience is so important. All right, so now we've got our fifth candle. Notice how we've got a big time engulfing strong bull, but also notice that the volume bar at the bottom is not that significant. So we're not going to give too much weight. We're going to wait and see what this is going to do here. So it went down to the R3, and bounced off it, but it's really close to it still. So we're just not sure yet. Now, the price dropped dramatically to R2, as you can see down there at 47.53. Is our stock about to drop? Should I go short? What do you think? No. Why? Because our overall thesis is that there's strength right now still. And we're not being stubborn about that, but we're remembering all the work we did in the pre-market and what it looks like now, right? So if the candle had closed down near the R2 and had more volume, the price might be heading into a decline. But that's why we wait for candles to close before we do anything, right? If you just try to anticipate, you're going to lose more often than win. That's my opinion. So it did not close down there at R2. It rejected it strongly, significantly. See all that? That's a really strong bullish candle when it's that much of a wick underneath a hammer candle. All right, so now we're adding a couple more, or one more level here at R2 because that's the price has danced around there. So we're going to watch that. All right. Next candle. This is an important candle because it opened and closed above our key levels. You see that? We're back to looking strong again. Next candle, boom. We got a big, solid, strong, bullish candle. All right. Finally, we have several signs that buyers are in control. And here's one of them. The price stayed above R3. It closed above, on a 2-minute chart anyway, closed above R3 for this entire time. 2, 4, 6, 8, 10, 12, 14 minutes. It closed above R3. So that's very strong that it's holding that level. Now, if that R3 level wasn't there, this would be a different story. It's still holding an area, but because it's an R3, R3 is very strong. We're pretty sure this thing is taken off at this point, especially with that last candle there. Look how it held the R3. Plus, it more or less, you could also argue that it held my gap level there too, very, very close to it. After all that waiting, now we have what we need to put on a trade. Strength tells us buy long. All right, so you can go, depending on how anticipatory you want to be, you can go in at 47.90 if you're feeling it. You can go in not till this candle closes, or you can go a little before it closes, which is what I've got indicated here, with a stop at my gap level of 47.80, which is just below the low of that candle. So that's a pretty solid stop point. And now we're off and running. As you can see, the stock took off very cleanly up, and we didn't even have any bearish candles on this 2-minute chart, which is awesome. Slowed down a little bit at 46.80, just past I think that's R4, yeah, 3, 4. And so there you go. What do you think about those apples? Look at this climb we got. So that's pre-market analysis for day trading, a real basic version of a way to approach your trading. Thank you so much for watching, and stay tuned for another video. And remember, create a process and stick to it. Stay chill, bro.